All right, let's get into this FHA loan. It's one of the most popular loan programs out there. Two main reasons. Number one, credit scores under 680. Number two, it allows for more extended debt to income ratios, which is going to be a big factor here over the next 18 months. Tell me what you know about the FHA loan.
Okay, so the benefit of the FHA loan, if we look at the conventional side of things, conventional has down payment amounts as small as 3%. But in order to get credit score flexibility and underwriting exceptions, you got to put 20-25% down in order to get a break on some of the ways to get your loan approved. That's what makes FHA loans fantastic, because it's more like a pass-fail grading system. You can get in with 3.5% down. You either get the program or you don't. But unlike the conventional side, you know, if you needed to get an exception on some ratios or your credit score was in the low 600s, the conventional side, you'd have to put 20 or 25% down or more. This just provides immense opportunities for folks. And the part that we're excited about is we expect it to be even more attractive or more beneficial for home buyers in the upcoming months.
Okay, so it starts at 580 is the minimum credit score for FHA. And then I'm not going to go into great detail of what debt to income ratio means, but a normal conventional loan is somewhere around 42 to 45% on your back end. FHA will, in some circumstances, go to 56.99% on the back end. That's that flexibility that you're talking about. Interest rates, how do they look compared to conventional, you know, your initial base rate?
I know we're going to talk a lot about the exciting parts of FHA, but the FHA interest rates right now are running almost 0.5% below the conventional interest rates. So from an interest rate side of things and a down payment and underwriting flexibility, it is absolutely fantastic. That debt to income ratio stuff that you were talking about, Kirk, if we just assume, you know, $5,000 a month for income for a borrower, FHA would allow somebody to qualify for $40,000 to $45,000 more in purchasing power because of that flexibility.
That's huge. So we have still home values increasing. We haven't even flattened out yet, but mortgage rates, more importantly, are skyrocketing quickly, which is eroding into that purchase power that most folks out there who are contemplating these types of loans, they're going to need that additional purchase power to play ball in this market. Talk to me. Go ahead.
Go ahead. I was just going to say, we talk about the 580 to 680 credit score range. The reason why that's relevant for our conversation here is that if you were comparing this with a conventional loan option, if your credit score is below 680, FHA saves you a bunch of money per month in the interest rate and the PMI. Now, there's another part of that too, that once you get below 680 on the conventional side, it's much harder to get an approval. So it's not only financially beneficial for the consumer in that credit score bucket, but it could be the difference between a yes and a no.
This is a first-time home buyer program for the most part. So probably 75% of the people that use it are using it for as a first-time home buyer program. 3.5% down. You can get seller concessions. It's not really a big thing that's happening right now, but want to throw that out there that you can get 6% back. It's going to change. Let's talk about some of the negatives or the stigma with an FHA loan versus conventional.
Yeah, we said we were getting excited about the changes coming up down the road, right?
Yep.
So FHA, one of the things that is slightly less attractive than the conventional option is you pay mortgage insurance in two ways. Everybody, well, not everybody, it's general that you pay PMI in the payment or mortgage insurance. FHA has that, but they also have an amount that's due up front. Now, that's not out of pocket. It gets rolled into the loan amount, but that's the negative there when you're comparing the conventional and FHA. Now, what we think is coming down the road is there's going to be a reduction in the amount of mortgage insurance. So it could be less that's rolled into the loan, and it could be less that's collected each month. We're waiting to see what those details are. But again, that's going to do nothing but make that even more competitive with the conventional options. So
this is one of those levers they're pulling behind the scenes to help with the affordability factor that we know that we're going to run into here quickly. So first thing that you do is, what's your credit score? What do you think it is? Are you below that 680 threshold? I'm going to move you over into this bucket and kind of show you what that looks like over here, because conventional is just not going to make sense for them. This is a discussion that takes a little bit of time to work through the details of why is this better, FHA versus conventional. And then last thing I want to throw out to you, how does that factor in with the buyers and the sellers, buying agent, selling agent who are handling these transactions? What's their stigma with the FHA?
Well, you know, the FHA stigma goes back a long ways. There's one other thing that makes it different than conventional loans, in that in the appraisal process, there is an inspection, although it's very, very minor and I would say not real detailed, but there is an inspection component of the appraisal different than FHA. So they're just looking for safety and sanitary issues. But if we use that premise, that's what goes back, in some real estate agents and or sellers have a fear of that appraisal requirement. So that's part of one of the two reasons why the popularity of FHA right now isn't as great as it should be. We have the appraisal component, but the other part that we have is, in a strong seller's market, low down payment options, period, do not win very often. So it's more about, in my opinion, the amount of money that the person has to work with for the transaction than it is necessarily the loan program to get across the finish line.
Guys, again, we're talking cash is first, conventional is going to come in second, FHA, VA are tied for third. That's typically how the person representing the seller is going to present their offers to them and help them work through that. It's a wonderful program. It offers a lot of flexibility. Interest rates are great. We love using it. It's not hard to do. There's no additional steps that you have to go through from the consumer's end. So FHA is a great program. If you have any questions, please reach out to us and we will catch up with you guys soon.
Hey, thanks for watching. See ya.
Thank you. Bye-bye.